Hi, it's Larry Gaines, Power Cycle Trading, and in this video I'm going to take you through some major market divergence and major trend breakdowns that have started happening. But before I get started, if you've not received my free ebook, please go to powercycletrading.com and you'll see 15 option trading strategies. It's a really great ebook on options. Put your name, email address in there and you'll get it right away. I also have another ebook where you can just go to my web page and you'll see free ebooks, and this one is on day trading E-mini futures. Just put your name, email address and get it right away. Now I've got one more announcement to make before I get started. Now I also wanted to invite you to a mini boot camp that I'm going to have next week on the 10th and 11th of April, and this is going to be on earnings. So, you know, there's a lot of great earning opportunities. There's a lot of volatility that's created around earnings, and I'm going to teach you some really great option strategies, how to benefit from trading earnings, going in pre-earnings and then after. So if you'd like to learn how to participate in trading around earnings with some really kind of strategies that are non-directional, I'm going to have a great mini boot camp just specifically for earnings. So if you can, join me. This will be on April 10th and 11th at 7 p.m. Central, and you'll get on this email. I'll leave you the link in order to register for that. Now, yesterday in our members newsletter video that I put out every night after the close, I mentioned that we had a big rally on the NASDAQ 100 on the 2nd. Here's the 2nd of April. So we had this low that was put in on the 1st, came off hard on the 1st, and we had a low down here at about 27.84. Then we had a really huge move to the upside on the 2nd, and then it pulled back into the close. And what I was telling my members is that what you need to see is commitment to this move. So what you wanted to see today, the 3rd of April, is to see this 25% retracement hold, and if it can hold here, or at least the 382, hold these two levels here, one or the other, and then continue back up, then that shows you commitment to the move. If not, then this would happen. Basically, you can see how it just wiped out the whole move and then some. So I'm going to take you through now and show you the various key divergence that's going on currently in the market, and how that's upsetting the markets and the trend breakdowns that are starting to occur. Now, first off, a good measure of strength to a global economy can be measured a lot of times by copper and the demand for copper. So here is the copper futures, and this is a weekly chart, and I call this the long-term trend. And you can see that copper, the last time it made a high back here in July. Well, basically back here, the high was back around February 2011, and since then, we've been in a downtrend ever since. We had it, washed out here, rallied back, but you can see that we're currently still in a downtrend. So, for global expansion and the global growth, this is a very good measure and a component that you can watch. And as the equities in the U.S. have been going up, this has been going down. So this is divergence. So this is one element of divergence. Now, for all of our trading at Power Cycle Trading, we use a trading model. Our current model, based on different time frames, we're currently in a long for the long term and also for the macro. So it's still long. It's very close here to turning over to go neutral. And you can see you've got a trend line coming in here on the long term. Now this is going to show you the divergence. So we've had a strong S&P market, we've had a strong Dow, and today we just had a pullback here into the 21 period moving average. Now our medium-term trend following system is currently short. So we're long on the long term, very close to going neutral, very close to actually going short as well, but we're short on the medium term. But you can see the market's been holding up over this 21 EMA quite strong. Up until today it was holding up over the 8. So this market's been relatively strong, but it's starting to show cracks. Now the strongest market has been the Dow Jones because mostly the blue chip stocks. So a lot of the institutions have been going for the bluer chip stocks, for safety, security, for the yields that they throw off. So it's been a very, very good trend up. Our system's currently still long here on the long term, and on the Dow we're currently short on the medium term. But you can see it's been a very strong trend up, holding up quite well. Now let me show you some of the other markets, and I'll show you the divergence and trend breakdowns. Now here's a chart to show you the S&P futures on the top and the U.S. Treasury 30-year bonds on the bottom. Now we've had this trend, you see this trend moving up here since the first of the year. Equities have just gone on the straight path up, trending up. Really nice sustained bull trend. Now when this was trending up, you can see the bonds were trending down. When this was trending up here, bonds came down hard. Now the last 2 weeks we've seen the bonds moving up and we've seen equities moving up. Now this is usually, these two are non-correlated. When the bonds, well, their correlation is that when bonds go up, equities should go down and vice versa. So as bonds go down, equities go up. As bonds go up or sideways, equities shall go sideways to up. As bonds go down here, you can see equities go up. So as bonds go up here, you can see equities come down. So when there's a flight to safety for a secure asset like the treasuries, then a lot of that money flows out of the equities. So perhaps we've been having a little bit of run-in with North Korea. You can see the bonds have started trending up. Perhaps that's global money flowing into bonds for security. Who knows? But this is usually the smart money. The bonds tend to know better than the equity markets. So what you're seeing here are bonds still going up, trending higher, and you started to see just a little bit of a breakdown today on the S&P futures. So bonds moving up, equities moving up. That's not a correlation that usually happens to sustain itself. So we're starting to see that crack. Now two other key components of this divergence that I'm talking about, where you have the S&P futures or S&P markets going up and the Dow going up. Now you've got the transports rolled over. So here's a weekly long-term time frame. You can see here it's broken down to the downside. Our long-term trend now is short, medium-term trend is short. Big pullback here. Now the transports really led the markets up and started the rally back in October. This was the first thing to get going, and now it's rolling over first. So this is a major divergence, a major trend break. The next part of this divergence is the Russell 2000. Now these are 2,000 of small cap stocks, and this is usually indicative of a growth in the U.S. So you can see this also started back in October, a nice trend to the upside. And so the transports in the Russell 2000 were leading the markets. They were the real leaders ahead of even the Dow and the S&P. And you can see here today it's rolled over big time, broken a trend line, a major trend line on the weekly. And also you can see it's broken below the 21 EMA and it's down into the 50. So these are key parts of divergence that we're seeing. And so if these two parts of the indexes continue moving lower, that's going to hurt the chance of either the Dow maintaining its current path to the upside and even the S&P 500. So these will have an effect. So if they can't show some composure and find some stability here, then we could see a bigger push to the downside on all the markets. Now I'll just leave you with one last thing. Using Fibonacci retracement, here's the Dow futures. Here, well, this is the Dow Cash CBOE. Now the trend started to the upside back in November of 2012, and since then we reached this high basically this week at 146.84. Now if we do start pulling back, the first level support will be the 25% retracement, so that's 141.30, and the next level support, which is usually the area where it's going to go to, will be the 382, so that's 138. our Dow 13,800. So keep that in mind. If we start seeing those transports speed up, pushing lower, the Russell pushing lower, bonds moving higher, this will eventually have to correct, and the first level support will be right there, and then the 382. So I hope this helps. And one last thing, again, I'm going to have that earnings webinar, which will be very helpful. We're coming into earnings seasons now. So if you're interested in signing up, please do. It's going to be on April the 10th and 11th. And on this email, it'll give you a link where you can register for that. So good luck trading tomorrow, and I'll talk to you later.